Ladies and gentlemen, welcome to The Plain Bagel. I'm your host, Richard Coffin. We are back again with an investing TikTok review, part 2. The first video I did of this did really well. A lot of people seem to enjoy it. You can find the link for that one in the description down below. And I got a lot of requests to do this once again, to go through a few more videos. So here we are. And by the way, because the first one did actually do fairly well, we did get a lot of new viewers to the channel, so I should probably qualify myself for those who are brand new here, given that I've recently learned that calling yourself an analyst doesn't mean a whole lot in the TikTok space. So hi, I'm Richard Coffin. I work for an investment manager here in Ottawa. I have my Chartered Financial Analyst designation, my Certified Financial Planner designation, and I am registered as a portfolio manager, meaning that I'm registered properly to give investment advice, discretionary advice for clients. And today my goal is to watch a few popular TikToks in the investing / money / whatever space to clear up any misconceptions. Unfortunately, it seems like a lot of the top TikToks have kind of misinformation in them. And that's not to say that all TikToks are like this. There are actually a lot of good ones that focus on, short tidbits of information, explain what types of accounts there are and things like that. But there's also a lot of, flexing, showing off fast cars, and usually selling you something, using this kind of wealth and this image to sell you something. So really that's what I'm trying to focus on, is to clear up those things so that viewers are more informed when they try to invest themselves. So without further ado, let's get into it.
Joe Biden has committed to changing the entire U.S. fleet to electric vehicles. You might want to do this now to your portfolio to reap the benefits. Add Tesla. Police departments have already started buying Tesla police cars. Add Workhorse. Imagine the mail carriers driving these. Add GM. Okay, let me explain this one. GM has a big push to bring a lot of electric vehicles in their lineup. Add IDEX. Ideanomics has a whole division with the whole purpose of transferring fleets from gas powered to electric, sales, financing, and electricity.
So again, kind of like the points I made in my original video, this is nowhere near enough information to justify these sorts of buys. Chasing kind of news headlines as a retail investor, it's really not a sound strategy. Outside the fact that there's nothing else about this company given to us about, how much money they're making and things like that, there's the fact that, with these sorts of headlines, by the time that you get to your computer, your phone or whatever and enter buy for a position, traders, institutional investors have already had all the time in the world that they need to reflect that change in value of that position in the stock price. I don't think a lot of beginners appreciate how fast these people are with updating a stock to reflect new information. There's quite literally competitions that occur out there to buy a stock nanoseconds faster than competitors based on things like this, based on news headlines. So as a retail investor, we just don't have the capacity to use an investing strategy based on that sort of thing, where you're just focusing on, individual news headlines. By the time you make the purchase, that stock price will already reflect the information, which will lower the return for you, and you won't really be rewarded, if you will, for trading based on this sort of stuff. It's not to say you can't use news as part of your justification for a position, but you need to do a lot more research outside of just headlines. Focusing on headlines to buy and sell positions, it's likely not going to do well for you. It's not going to be a reliable strategy. You may as well be throwing darts at a board.
I may be a loner, but
7
y'all hang out with people that talk shit about y'all.
If you actually slow this video down, you see that they all have a shitcoin called Supersonic Finance. Right here you see it, and he has like 97 bajillion of these things. And basically you can never cash this out because there's no liquidity. And they could have just faked this as well by changing the currency. Here's the rug pull shitcoin that they have. As you can see, complete just rug pull.
This is actually a really good point about the liquidity problem faced by a lot of altcoins. A lot of cryptocurrencies that are more obscure, that you might have seen stories of, people seeing their account reach billions of dollars from like a single altcoin that maybe they put like, $100 or $1,000 in. A lot of the time, they will never see that dollar amount. They won't even see anything close to that amount, especially with more obscure cryptocurrencies. It's not really an issue with like Bitcoin or Ethereum, but when it comes to these smaller projects, there is a big liquidity problem. There's a good analogy from a book I read. I can't remember off the top of my head which one it was, but it goes something along the lines of, there's an investor who wants to buy a stock. So he calls his broker and he says, I want to buy this stock at $10 a share. So he does, and it goes up to $12. He says, great, I've made a quick 20%. I'd like to buy more of this stock. So he puts more money in, goes up even higher, let's say to $30. And seeing that great growth, he says, great, I'd like to put all my life savings into this stock. He does so, and let's say it goes up to $100 a share. very happy with the return that he's seen, he tells his broker, great, I would like to sell everything and cash in my return. And the broker says, to who? You are the only person in this market. And that's kind of the same issue with some of these cryptocurrencies. The price can go very high based on buy demand when there's not a whole lot of liquidity, if you will, when there's not a whole lot of trading activity. But when you try to sell these things, you need a billionaire at the other end of that trade to buy that thing. And most of the time with these altcoins, you don't have that sort of capital ready. And so when you only have trades happening every so often, it's very hard to sell out at the market value of that thing. You usually have to put a pretty heavy discount to get out of the position. And that's sort of the problem faced by these altcoins. So a risk worth knowing, and kudos to this guy for highlighting that when it comes to certain altcoin cryptocurrencies. Why are you stressing? Who needs to be a millionaire by the age of 21? Go enjoy your life. This seems to be really common on TikTok, is a lot of young people, talking about how much money they made so early on. It's not normal. I don't like to see this sort of hustle stuff. 19-year-olds, who's stressing to be a millionaire by that age? Don't stress if you're not a millionaire by the age of 21. You're doing fine. So obviously a guy pointing out a stock that he highlighted in the past that's made a lot of money and using that to probably sell a course from the looks of it. The thing to remember with this sort of stuff is it's kind of misrepresentation at its finest, right? You should never judge someone's merit as an analyst or a researcher or an investor based on individual positions, because this guy, probably has more than just this one stock. And really the only way to judge someone's merit, if you will, is to look at the whole picture, right? Their whole portfolio. Because chances are, if this guy is investing in things like, BNGO in this case, which, full disclaimer, I know nothing about, he probably has a lot of positions that did very poorly. In fact, he might actually have an overall negative performance because he's picked so many, players that are so risky and, volatile, if you will. But obviously, he has the power to pick which positions he shows people. So really, it's kind of a rule of thumb that if anyone ever highlights a single or even like a small handful of positions as sort of a justification for why they're a good investor or why you should buy their course or follow them or whatever, you should probably ignore them because they aren't giving you the full picture. They're misrepresenting their skill, just showing you the best of the best. There's a reason why in the industry there are standards around how you can report your performance. It's because you're regulated to give the whole picture. You're not allowed to just highlight, individual positions and use that as a selling point. And even on the professional side, there's misrepresentation there as well. If a fund doesn't have a good 5-year performance track record, well, they'll just show you the 3-year track record. So it's those sorts of things you should be aware of and why you shouldn't really rely on someone, highlighting an individual year or thing or whatever as a reason to follow them. It's not a good representation of their competence, especially when they don't show you the supporting research and all the information you need to know as to why they made that decision, as opposed to, maybe they just threw a dart at a board. It's that sort of stuff you should be aware of and why you really shouldn't put a lot of merit into this kind of stuff. Truthfully, it's a sales gimmick. Don't let it influence your investing decisions.
At the beginning of the year, if you put $1,000 into these cryptos, this is how much you would have right now. Let's start from the lowest amount. Litecoin, you would have $1,069. Bitcoin.
Come on, man. You can't make it through that?
You would have $1,188. Chainlink, you would have 1.6. Polkadot, 1.6.
All right,
Tron,
we get the idea. We'll skip forward.
Telcoin, you would have 144K.
So again, this guy's not making any recommendations here, but in terms of highlighting past returns, that's great and all. Sure, it's cool to see that Telecoin did so well and that people who bought that would have made a lot of money. But you have to keep in mind that there are thousands of cryptocurrencies out there. And for each one of these, there are probably hundreds that have failed miserably, that have lost people a lot of money. So sure, it's great to go through the past top performers and say, man, wouldn't you wish you had just bought, a little bit of this, you would have done so well. But it doesn't really give us any forward-looking information. You can sort of think of it as if someone was at a roulette table and, looked at all the past numbers and they said, boy, don't you wish you had put $1,000 on 6, 32, 15, and 21? It's like, sure, but that's not very helpful. It doesn't tell me anything about moving forward. It kind of just leaves you with this sense of FOMO, fear of missing out. And usually that's sort of used by some of these people to get you to do something, whether it be to buy this thing that they've highlighted after the fact. Wait, I think that's the guy from earlier. I think that's the liquidity guy. You were the chosen one! Disappointed.
What's a piece of information that you learned that feels illegal to know?
Probably if you're an American citizen, you actually have the right to look up and see which stocks rich people, CEOs, CFOs, people that are high up in companies are buying, and you're allowed to copy it. So I'm going to show you the website I use because I made 17% on a stock in just one day today. Okay, so all you have to do is go to this website right here, Open Insider, click on this button that says charts, and it's going to show you the blue right here is when rich people are buying a bunch of stocks, and the red is when they're selling it. So back when COVID hit, they started buying up a bunch of stocks, and then they all went up in value, and now they're selling them.
So this is a real thing. A lot of analysts do actually watch insider trading activity. Insiders are people who are executives or high up and connected with public firms. And regulators require these sort of people to disclose their personal trades publicly because they want to avoid insider trading, which is when those executives use information that the general public might not be privy to buy and sell stocks and make a profit. Say they know that a bad quarter is coming up, so they sell all their position before the news breaks, and then they obviously save themselves a lot of money. That's the sort of thing that this rule is supposed to prevent. But the thought with following these sort of trades is even if these people don't use an explicit piece of insider information to buy or sell a stock, they likely know some things the public don't, and they might make some trades that might not be caught by regulators based on the information they're privy to. So for that reason, there's sort of this connection that, well, if they know more than we do as public outside investors, that if we just follow them, we'll likely do well. And there are some papers that suggest that that's a valid thing. The problem, of course, is that it alone is still not enough to justify a buy or sell in and of itself. It's a good indicator when combined with other things. It can certainly be part of your investment thesis that you like this company and the executives like it, they're buying more of the position. That's positive. There have also been companies where the executives have bought in and it's still crashed because keep in mind the executives are aware that their trades are public as well, and they might try to use that to change market sentiment and things like that. And of course, just with everything, when something simple that leads to a positive return, the issue is that everyone will flock to that strategy and sort of negate it because they'll buy up the positions that are recommended, thereby reducing the return from those positions for other investors because they have to buy in at a higher price for those positions recommended by the strategy. So it's worth keeping in mind. Sure, you can use insider trading as part of your thesis, if you will. As with a lot of things, in and of itself, not enough to justify a stock buy. So that's all the time we have for today. Thank you for joining me. I hope I added some value in terms of clearing up some information, some misinformation, and just hopefully better preparing you for your own investing. TikTok, again, I think it's a great social media app. There's just not enough time to get stock research and stock tips and things like that from it. It's not to say people can't talk about investing and things like that, but just take everything you hear from the platform with a grain of salt, with full appreciation that everything on there is edited, made to look perfect so that you as a consumer will see this person in the best light possible. And take their skill level at face value, when in reality that's just not how it works. There's a lot of these people are selling courses trying to get you to buy something. It's just not stuff that's likely going to benefit you if you kind of subscribe to that sort of thing. So thanks for stopping by, and as always, be safe out there.